This conference will now be recorded.
Good evening, ladies and gentlemen. This is Wholesale Trading Frank. It's approximately 9:08 p.m. on August 16, 2020. Welcome. This is our weekly strategic webinar update that we do every Sunday evening around anytime between 8 or 9 p.m. These sessions are recorded, uploaded to the YouTube channel on Clueless8_trading that all of you should be subscribed to simply by putting in your email. So you get a notification anytime any of the uploads are going through. As a quick reminder to all our new members, right after these sessions, these video casts or video blogs, whatever you call it, end within 20 to 25 minutes, the recording link is uploaded directly to the real-time Twitter feed. So you don't have to wait around for the delayed upload to YouTube. Some people have said, hey, I don't see the video. I need to hear the recording. Well, it's right there on the real-time Twitter feed. You just click the link, go to meeting, and it directly takes you into the recording so you can hear this. For people who can make it into the live session, they can listen to it at their own time. So please, if that's an important reminder, don't always have to wait around for the YouTube upload because sometimes takes a little bit longer and sometimes can be delayed overnight. So just letting you guys know. On that note, full disclosure, this is purely for financial education and not for any solicitation or advice. 1 second, please. There are some breaking headlines showing up as text on my iPhone, so I just had to look at one of them. All right, so we got a good crowd here. We have Jay, we have Mike, we have RA, and we have Rick. So let me just barge through a bunch of important things that are going to be relevant for us in the coming week, and so you guys are all prepared for what might happen. So let's start off with a couple of broad points. We already know what's going on. The markets are, hitting some new highs. Well, banging its head towards the old highs, all-time highs, ATH. And obviously, like I've mentioned quite a few times, it's only natural that once you get to those levels, there's going to be some choppy volatility or a standard range volatility. And that's exactly what's going on. Overall, it's bullish, obviously, because the markets haven't broken down despite intraday volatility. And this gives us at least the internals and everything are giving us a direct indication, a technical indication, I should say. And remember, nothing is 100% correct, but we play the probability game. So if you're into the game of probability, which you should be, given that you're option traders or risk traders and trading stocks, you have to keep in mind that we go with whatever the higher probability outcome is, just standard stuff. So the higher probability outcome is certainly showing, as we will look at the charts, that the higher probability outcome is basically showing that we're probably going to kiss the high probability. We're going to kiss the old all-time highs, which we're just around the corner from, and then possibly overshoot a little bit. And that little bit on a weekly basis can be quite a few hundred points. On a daily basis could be maybe 50 or 60 points before the standard sell programs come in. So you have to be prepared. So what I'm getting at as you move forward into this important week, this is a monthly options expiration. I'd like to repeat to everybody, especially newer members who haven't been with us, that monthly options expiration, which is the 21st of August, Friday, is generally a bullish event for at least a couple of days before it occurs. All right. So, and I mentioned that on my Twitter feed also on Friday. So bottom line is that, and my previous webinars. So, and the bottom line is that you have to be somewhat agile. You have to be keeping an eye, whether you like it or not, on your positions. Whether you're too busy or whatever, I can't help you with that. But this is going to be a week where you need to be agile, you need to be flexible, and you need to be quick in taking profits. Even though the primary trend is higher, options profits or stock profits can disappear just like that, just because some sell program came in and just wiped everything out. You guys know that, I know that, so we have to be on our toes. That's all. You can put stop losses, you can do whatever you need to do, but you have to be monitoring the market very closely this week if you have any substantial amounts of money or whatever that you have in the market. So I just want to be very clear about that. There is no excuses around it. All right. So saying all that, is generally is a bullish event. The monthly options expiration on Friday, not every single day, but at the same time, market generally tends to go higher into Thursday. Wednesday is always a hump day where if we Monday or Tuesday if we run up. That's giving you some, basic stuff that happens. Monday or Tuesday, if we run up, Wednesday is a pullback day, and then Thursday it pulls up again, and then by Friday morning, markets, if they're really rushing forward, will reach, some sort of intermediate short-term pop high, and then they will be selling in the afternoon. Okay. See, most probably will happen that way. I've been doing this for a while, and that's what I've seen. Anyways, that's the first thing. The second thing is it's a heavy earnings week. There are some real big important, some powerful companies coming out, including NVIDIA. So we're going to go through that in a minute. So aside from that, we know what's going on. Congress is in recess. However, they're coming back. That's one of the texts that was breaking regarding this whole U.S. Postal Office situation that's going on. I'm not going to get into it right now. It's a very political stuff that's going on there. So the House has been asked to come back from recess because the House had left for recess, the standard stuff, till September 14th. So now they're coming back. Maybe they're going to hammer out a stimulus deal, which there was some glimmers of hope because over the weekend it was said that. And I was going to post that and a chance to do it. It was on CNBC. It was posted that there were internal talks. I'm just looking for it right now for you guys. It's very important news. Where is it? Okay. House makers meet with White House on stalled coronavirus talks. That was 1 day ago. So basically, a bipartisan group away from the big heads. It's called the Problem Solvers Caucus. Okay, 7 members of the bipartisan Problem Solvers Caucus who had previously met twice to try to advance negotiations. I'm just reading it to you. Were present at the discussion which took place Friday morning. The dialogue was respectful and productive. These are good things that we need to hear. Okay, and another meeting is possible. So who knows? We might get a stimulus deal. In which case, it's markets going to go for at least a couple of hours, if not a day or so. It's going to go gangbusters higher. All right, so get ready to sell on that pop and then reevaluate what happens. That's what we do as tactical traders. So that's another good news. There's no other major news on COVID. There's no other major news on anything else overseas. It seems like the China phase 1 trade deal talk are going well. They didn't need to have another meeting because China is accelerating purchases of U.S. agricultural goods and such, oil. That's good news. As long as the name calling stops from both sides, I think it'd be better news. But hey, we're not politicians, so we're going to stay away from that. So that's just the way it is. All right. Just giving you a quick synopsis of what's happening in the real world. Let's get into the economic calendar. Very important. What do we have here? Monday. Just going straight. Empire State Manufacturing Survey. It's important. Not critically important, but certainly important, showing whether or not the U.S. economy is starting to pick up. That's Empire State. That's New York State, baby. All right. And so the big boys are New York State and a couple of other manufacturing hubs across the country. So this is quite important. The housing market index is important. Housing is doing well, so you should continue to see some good numbers. If this one has a real big pop, markets are initially after 8:30, you're going to see futures pop a little bit. That's tomorrow. Futures right now are up about 8.5 points, and we're going to see it on the chart what it looks like. You got on Tuesday, you got the housing starts. That's important. The Red Book sales, retail sales and stuff. That's important. E-commerce retail sales. That seems to be a new addition to the Labor Department. I'm sorry, the government data release. E-commerce retail sales. That certainly is important. Not critical, but certainly very important. Wednesday, mortgage applications, it connects with the housing stuff, so that should be good. So that's important, not critically important, but important. And what's most important is the FOMC minutes, the Federal Open Market Committee minutes from the last meeting, where they open up the books and basically says, okay, this is what we talked about. So this is going to be scrutinized very, very carefully, and you should expect to see some volatility based on what kind of verbiage and tone is coming out from the Fed, even though Fed has been made it dead clear. I don't know how much more clear they can make that they are going to be as friendly as possible, using all the mechanisms of the Federal Reserve and all open market committee tools to help the U.S. economy. I mean, I don't know how clear they can get, but the market and Wall Street loves to basically decipher it to the point where it gets kind of idiotic. I mean, any simple person can understand that Jerome Powell and the Fed and the Federal Reserve governors are committed to helping boost and bolster the U.S. economy. It's our government that basically always messes up things, not the Federal Reserve. So that's it. That's the FOMC minutes. That's on. This is the most important critical release at 2 p.m. Compared, in the first half of the week. Then comes Thursday, you have the jobless claims. That's very important. We need to, see if lots of jobs are bouncing back, which it seems like they are. Initial jobless claims were lower on Friday. Friday or Thursday, I can't remember, but it's good. Leading indicators, that's important, actually quite important. The rest of the stuff is bonds and all that. And then comes Friday. We have the PMI. That's a measure of inflation. Purchasing Managers Index. How's our purchasing managers of all these U.S. corporations and factories and blah blah blah. What are they looking at? Are they seeing a rise in prices in raw materials that go into finished products? And so it's important. Let's just put it this way. We need to get a moderately higher number that shows that there is expansion going on. We don't need a big spike. That means inflation's coming back. I don't want to be an economics professor here, but anybody with anything knows that at this point, with the slower growth trajectory in the US, with everything that happened, we don't need to see a spike in inflation. That's called stagflation. No, it's not a stag party at your old fraternity, but bottom line is stagflation is not a word you want to hear. We're not hearing it, so it doesn't really matter, but you don't need slow growth and high inflation because that's like a no-no. So anyway, that's it. Existing home sales, that ties in with the housing numbers and stuff. That's important. So that's it. So now you're well versed on what's coming this week with the economic numbers. Let's move on. Let's take a look. We're going to go backwards today. Let's take a look at earnings, where the monies are made. So let's pull it out. Are you guys with me so far? Yes,
Right,
no,
right,
maybe?
right.
Oh,
Okay.
Yep.
yeah. Anybody doesn't get anything, feel free to stop me. This is for your benefit, not mine. So certainly say, hey, could you explain that? And I'll try to do it as quickly as possible. So this week. So let's kick off this week. What happens? Let's move this out. There we go. So you got some real numbers coming out here this week. And I'm certainly going to play some earnings. Win or lose, got to be in it to win it, as you all know. All right. Don't have to go nuts, but you certainly have to be in there. Otherwise, you're going to miss those nice 300-point type of poppers or 200 type of poppers like we got on, for example, Applied Materials. The calls went from $1.67 to almost $4. Take a look at it yourself. On my Instagram thing, I put it up there. All of you, all new members, by now you should. I mean, like I said on the welcome email, it is almost mandatory. I can't force you to, but you guys should always follow the Instagram channel because I highlight a couple of the big options trades that we do. Those are actual trades that we deliver to all members in real time, but you see them in visual form, in the form of charts. And it's kind of fun to look at them. Some of you were probably in them, and so it's more fun to look at it when you make money on them, right? So please follow us at clueless8_trading at Instagram and tell all your friends and colleagues, whatever, to follow that. It's a simple, elegant, and resource to highlight and promote the presence of Clueless 8 Trading, because we don't really do any major social media advertising and stuff like that. So please help us grow our community by telling people to follow us there, and maybe they'll come and check us out, and maybe they'll join us, and it'll be all great. One big happy family. So let's look at I better change the color so we can see it. All right, this is before the open. Unfortunately, I don't, I don't have any ER trades that I put out there on Friday, and so we are going to So we don't, we're not going to take, if JD.com, which is Alibaba Junior, pops up, well, some of you might have picked it up or whatever. You definitely like it a lot. So JD.com, is pre-market. Weibo, Cena, these are pre-market, but these are before the open. So don't have anything, can't do anything about it. After the close, Best Incorporated, don't know what they are. Fabrinet, kind of know what they are. UI, Ubiquity, this is, I believe, a software company. If I'm right, I think I'm right. So I'm going to take a look at these two and see whether or not they're worth playing. Then comes Tuesday. Now we're talking business, all right? Advanced Auto Parts. This is a big, big mover, all right? Big, big mover. Like AutoZone and O'Reilly, secondhand auto parts, big business in, their business is flying because used car business and dealers are making money right, left, and center. So this is certainly one to play and look at. While I'm doing this, let's pull up one of the chart things on the side so we can put a face to these symbols. You guys are familiar with Advanced Auto Parts, right? The company?
Oh yeah, yep.
Okay, sounds good. These guys make tons of money. AutoZone, that stock is a beast. I don't know why I don't trade it all the time. I need to do it. We trade it time to time. We've done well on it on earnings. So AAP is not AAPL, AAP. Wow. So quick picture of this stock on a daily basis. This we have obviously traded it before. That's why the lines and stuff are drawn on it. It is looking pretty fantastic. However, fantastic, just because the charts look fantastic, you go into earnings, all of a sudden they'll drop it 10 points because they might say some word that some hedge fund decides to play upon, drops it down in after hours, freaks everyone out, and then takes it up the next day up like 10, 15, 20 points. They did that with Carvana. They took the stock down 30 points and then ran it up another 40 points the next day. Carvana, the online vending machine, buy cars through the vending machine stuff. It's amazing what these hedge funds do, and I've talked about it in the previous webinars. It's wild. So if somebody panicked and sold it the next morning, well, they saw 40 points just on the stock itself. Forget the options. Just on the stock itself, just whiz past, speed past them, and they're like, "Oh my God, what did I do?" So keep that in mind. Games are always played in this business. So this is definitely a good looking chart, and that chart is showing us, I don't know why these lines are there. They must have been because we did a weekly Fibonacci. Do we have a Fibonacci here? No, I just had levels that the stock can trade to. So honestly, the stock can trade to 171. It can trade up 13 bucks right there, because that was the last major supply zone or sell zone. Supply is sell, demand is buy. So that's the back on November of 2019. Wow, this is a weekly chart, so it goes back a lot. So it's a beautiful inverse head and shoulder, a Texas bullhorn pattern, as I like to call it. It looks like a Texas bullhorn. And it looks like this is a weekly chart, obviously. So it's going to, like, you're zoomed out, right? So can it go up on earnings to 171? Sure, it can. So this is definitive, in my opinion, a play. I mean, whichever lines you're looking at, all the crisscrosses, all the stochastics, the MACD, they're all, at least from a technical basis, signaling buy me. And it's been up since the drop on July 6th. It's been up every single week. Each candle is a week. So it's a good looking chart. Let's look at it on a more shorter term basis, like a daily, and the daily is still pointing to 170, 172. Let's take a look at the 1 hour chart. That's pointing to about 163 or thereabouts. So AAP, I mean, Advanced Auto, we like. Home Depot. Well, the story on Home Depot is great. They make money during COVID. They make money after COVID. Housing market's going stronger. People are doing all kinds of stuff with their homes, gardening, blah, blah, blah. Home Depot, you can't even get in there. because the lines are so freaking long. It's just amazing. And so, can Home Depot go higher? Fundamentally, it can. Can it go higher technically? Sure. On a very quick basis, Home Depot probably has 3 to 5 points built into it, maybe more. Home Depot is not a $15 type of mover. Remember that, right? Every stock has its certain implied volatility. So do the options. So it's not a $15 type of mover. It'll probably go up 5 to 7. That's still good enough because the calls are reasonably cheap and you make some real decent money on it. So Home Depot looks good. It looks good. And but just like anything else, for people who are new to this business, remember, earnings are a 50-50 gamble. They might drop it for 1 or 2 days and then run it up over the next 3 days. That's just the way they operate. Now, who's they? Myriad of players in the market. This is a game theory thing. There are so many variables. There are so many players in the game. There are hedge funds, there are institutional funds, there are pension funds, there are mutual funds. But the real gamblers in the market are hedge funds, right? Institutional funds. And all kinds of automated, and they're the ones who primarily run the automated black box artificial intelligence, what we call, what not we call it is the fact, algorithmic high frequency trading programs, which create massive volatility in the market. So still, it's looking at it a little bit more short term. Home Depot is, I would say 3 to 5 points. Probably get that. By tomorrow, it's going to show up here. The market maker odds, it shows up automatically on TD Ameritrade, and they'll tell you plus minus, 5 or 7 or 10, whatever. But I would say more in the $5 range. So Home Depot looks good. Internals look good. It's quite oversold on the MACD, so that if that turns up, Home Depot is going to literally have a monster move. Now, keep in mind, these things can pull up the broader indices like the Dow Jones Industrial Average and the Dow Jones Industrial Average and the home building sector and stuff rather quickly. So that'll also help the market head towards the new all-time highs that technically we're looking at. Is everyone with me so far?
Yes.
Good, because I'm sort of explaining things very simply, but this is exactly the way the markets operate, gentlemen. So let's look at the next one. Kingsoft Cloud, never heard of them. I'll check them out. Kohl's, that's another stock that's talked about and played a lot by lots of institutional players, Wall Street analysts. And what does it look like on? Let's see. What does it look like on the daily? I don't normally trade Kohl's. I have some lines and stuff drawn on Kohl's from way back. Let me clean these out. It's a little bit more clear. So on the daily, Kohl's looks like it's trading. It's somebody who's not really bullish on Kohl's. What's this pattern? Anyone know? Change the color. What's this pattern called? Can you step up and kind of take a guess?
Bear flag.
Yes, thank you very much. It's just the opposite of a bull flag. Thanks, Ed. That's a bull flag. Frank, the tank. Just kidding. That's a bull flag. Bull flag can look like this. A bull flag can look like this. A bull flag can look like, oh my God, it's killing all the shorts, like really shooting up. A bull flag can be sideways. So this is just the opposite. So this is a negative bull flag. So it's a bear flag. All right. Now, somebody's not bullish on this. They'll say, hey, that's a bear flag. So what does a bear flag do? Anyone else like to volunteer? What do you think? Just common sense. What does a bear flag do? And please, Ed, not you, and somebody who's not with us for a while. I just want people to use simple common sense and answer this
It's
question.
going up. Positivity. It's going
It's
up.
a pullback.
A 1%. Okay. Well, first of all, a bear flag. It's what? This is a bear flag.
Signifies a pullback, profit taking.
Okay, the profit taking's already happened, but you're close to the answer, but you're not giving the right answer. What does a bull flag do in simple English? If somebody walked over to you in the street and, hey, George, you're in the market, man. What does a bull flag do generally?
Blue flag means the price is going to go up.
Uh, exactly. A bull flag breaks out. That's how you answer the question. A bull flag
Okay.
breaks out, up or upside, right?
Yeah, to
So
the upside, yes.
in that note, somebody else please volunteer the answer. What does a bear flag do generally? Guys, I'm asking you guys to use some common sense. This is how you're going to learn to be a trader. If a bull flag breaks up to the upside, what does a bear flag do? A child can
It
answer
goes
this question.
down. It's
Thank
negative. It
you.
goes
Thank
down.
you. Don't drive me nuts, man. Jesus. I know all of us barely passed our GEDs. I mean, come on. Exactly. I'm giving you the answer. It's the opposite. What are you shy about? So, and the reason behind it from a technical perspective is that the standard technical perspective is that it generally tends to follow the primary trend, in which case the primary trend is lower, correct? The primary trend is lower. In a bull flag, the primary trend, like the market's going through multiple bull flags. How many times have you seen the word bull flag on my webinars, on my forecasts, on the markets and individual stocks? And I've been dead right on them overall, okay? Because bull markets create bull flags. The bull flag is nothing but a little profit taking where everyone freaks out and then drops their pants and then the market goes higher. All right. So basically, or I'm sorry, not drops their pants, but changes diapers. And by the time they're changing the diaper, the stock takes off. So bottom line is a bear flag is supposed to do the other thing. However, here is how you think outside the box. And this is what I need a little bit of thinking from all of you too. All right. What if it breaks out of the bear flag? And it's happened. It's happened a few times to a bunch of our stock. Now I don't really know Cole's the whole story and stuff like that. But what if what if their numbers come out a little bit better than expected, and just the way all these analysts and almost 90% of them were bearish on Disney, and then Disney took off like a rocket on earnings. What was it, a week ago? Like a week, 10 days ago? And it just demolished the shorts, went the other way. And Disney didn't even have a bear flag, but I'm just saying, what if the so-called consensus is wrong? So this is what happens. It's called a bear flag decimation, all right? So here's your, one second, gentlemen. Pen. Okay, so here's your primary trend. That was obviously the COVID-19 crash. Now it's starting to recover a bit, but it hasn't done that type of move like so many other stocks have done, right? The sort of the slanted V 45-degree angle move. You can clearly see here that just from a standard technical standpoint, it's a flag. Now, I have made money within bear flags. Why? Because it is still a bear flag, believe it or not, if it goes up to 35. That's a lot. I mean, a $23 stock going to 35, which Coles, doesn't do over earnings in one go, is you're talking 50% on the money almost, right? So more than that. But what I'm basically saying is, what if it does this and hits this top 30? This can happen. This can happen. So there are no guarantees per se, and this is a daily bear flag, so it takes multiple days. What if it doesn't do this, which it's textbook wise it should do? It should break down below 20. What if it comes down to 20 and bounces again, because that seems to be the support? So what I'm saying is, from a trader perspective, you got to be very thinking a little bit out of the box, take a bet against the conventional thinking, and try to make money when others are not looking at it the same way. So I don't know what the analyst consensus on Coles is. Maybe they love it a lot. Maybe they don't. I don't know. But what I'm saying is, this stock could pop, and that pop could be good for 3 to 4 points, which should be quite a bit. That means your options would be up about probably 100% or so overnight. And the options on Coles and stuff are cheap. You guys with me so far?
Yes. So if that stock pops,
Yes.
now that's in the upside,
Yes.
would that now be a bull flag because it's going up now? Is that
no?
am I saying that right? No.
On a daily basis, who asked this question? It's a very good question. Who's asked the question?
This was Jay.
Okay,
Jay.
Jay. Okay. this is what a bull flag looks like. For calls to turn into a bull flag, the stock
Okay.
has to but on a short-term basis, we're going to zoom in. Remember, every time frame you're looking at, the chart is going to look different. It's like you go from looking at it through a binocular and moving down to a microscope. Won't things
Okay.
look different?
Absolutely.
That's trading. That's charting. That's
Okay.
tactical trading. As we zoom in, I'm going to show you into the 1 hour, into the 15 minutes. This chart is going to look fundamentally different because you're zooming in. So, but in order for it to completely change course over the long term, these are each candle is 1 day. Then the stock has to resemble F. Okay, so in which case it has to break out and go like this. But by that time, so much money can be made. And by that time, every single BS, idiotic, majority of them are analysts from Wall Street and other firms are going to be all over it. That's the standard procedure with Wall Street. They are always late, other than a few of the greatest minds that I like and I mention time to time, like Tom Lee, Katie Stockton, who is the best technical analyst ever, and a few other people. Tony Dwyer, he's excellent. The rest of them, 100% bona fide idiots. Okay, so bottom line is, and believe me, I come from that circle. I wasn't an analyst. I was in institutional sales and research, but I had direct contact with, a lot of them. Terrible, but they get paid big for making wrong calls. Hey, that's the business in life. You know what I'm saying? Just like our politicians, they get paid. They get like paid big in different ways for doing stupid things. That's life. So to make a long story short, this will turn into a bear flag if the stock breaks over 35 and stuff. There's going to be a big short squeeze, which means a lot of funds who are short this stock will push it higher, but it has to basically look like this. The primary trend on a daily basis has to basically have a reactive opposite move like that. So can calls get up to 45? Maybe it can. Sure, they can. So that's the answer to your question. All right. So let's zoom in here and take a look at the 1 hour. Now, 1 hour looks like a completely different story. Does the 1 hour look like a bear flag or a bull flag? Somebody please look at it and answer the question within 3 seconds, please.
Bull flag.
There you
Yes,
go.
it looks like a bull flag. Exactly. There you go. Primary trend higher since 2 Fridays ago. See, I just showed you guys a very critical example of how your cognitive bias, i.e. how your brain thinks, changes as you change the time frame on a certain stock chart. All of a sudden, it looks very different. So all of a sudden, your cognitive bias or the way of your thinking changes. And this is what the story is. So the stock basically went from 18 to 24. That's 33% move. Pretty damn impressive. And it now is looking like a bull flag. And where does that bull flag move up to? Well, you can kind of do a quick back of the napkin calculation and go like this. I'm not drawing too many lines here. These lines that you see on my charts, these are auto-generated by Thinkorswim, not me, all right? They kind of have their own kind of simple charting, I don't know, pattern, whatever, so don't mistake them for the lines and stuff that I draw. So this stock can go to 26. $3, I'll take $3 on calls. You see what I'm talking about, guys? Yes? Okay.
Yeah. I see it.
Okay, good.
Yeah.
Now,
Yeah.
okay, let's move on now. Let's move on. We don't spend all night on calls. What are we having? We have Walmart. Now, a lot of analysts are big on Walmart right now, and rightfully so. Walmart's online digital sales, they're really is accelerating. Their overall sales have been very strong. Try being in a Walmart during during the COVID-19 thing, like within a month ago, you couldn't even get in. Okay, they're the ultimate essential place to get your home supplies and stuff like that. So Walmart is hot to trot. How about that? All right, and a lot of Analysts like it and stuff. And let's take a look at it. Walmart from a daily basis. That's one good looking chart. That's all I got to say. The Walton family, not the Waltons from TV, but the Walton family gets richer by $1 billion a day, baby. All right, $1 billion a day. That's America. All right, that's what capitalism is all about. God bless them. So what's the story here? Well, if you just take a simple, we call it back of the napkin type of drawing, like sitting with you, all right, baby, this is the way it can happen. Like, all right, next drink. All right, so this is an inverse head and shoulder. It can also be a cup with a nice curved handle. And this stock, Walmart could pull a Disney. I'm telling you. Like, it can really shock the market. Boom. But then people were really negative on Disney, but they're not that negative on Walmart. They're too negative on something, that means a lot of the hedge fund money and the fast money is trying to short it. So if they come up with strong numbers, boom, they get squeezed. So that creates a exaggerated, amplified move to the upside. You know how you see something, like a stock like Disney, it's normally not up $7, $11, $7, $8, $9. So after earnings, it was. That's because a lot of funds got completely decimated because they were short the stock. It's called a short squeeze. Reminder to all new members, don't understand any particular term, go to Investopedia, type it in, go to Google, type it in, learn it yourself. A short squeeze is the ultimate horrific event for short sellers. Just the way they died on Tesla. So that's the way it goes. So yeah, this looks really good. What can it go to? It can pop $5, $6. I'm definitely playing Walmart. Any questions? No. Okay. Next one. Where is next one? We have Walmart. We have Agilent. This is a chip networking company. So certainly worth a look. Lazy Boy. Once in a while, we used to play Lazy Boy. All right. So Lazy Boy's chart looks pretty damn good. I haven't seen it in a long time. That looks pretty damn good. These stocks normally pop maybe 8 to 10% max. So you can get a pop of anywhere from $2 to $3, but the options, will move 60, 70, 80%. Not bad for overnight earnings play. Lazy Boy looks good. Wow, I didn't even know the stock had gone to 15. Well, most stocks went to like next to nothing back when the market crashed, but that's a pretty nice move. It's a good looking chart. Max move would be 35, 3 points from there. Like I said, but $3, like I just said right now. So fills the gap. Looks good. Then we have analog devices. That's semi chips. Hot sector. Analog devices chart on the daily looks pretty good. Just like applied materials, the options went up almost 200%. Analog devices could do that. It's been around forever. Analog devices, they make chips for a lot of broad industries, not just for computers and stuff, wireless and this and that, household appliances. So networking primarily. So worth a look. We have Lowe's. I'm gonna go through these fast. A lot of good talk on Lowe's because Lowe's is Home Depot Junior, right? So that's basically it. So this stock could pop too. Like these stocks alone, like Home Depot, Walmart, Lowe's, they itself can move the Dow up 500. I mean, the 200-300 points over a matter of days. And I bet you that's how they're hooking up the market right now, going to options expiration. It's all a game, the pieces are put together. So Target, they're very hot on Target. Target again, like Walmart, their digital sales, this is one of the best looking charts ever. Seriously. So Target, let me take this out. Target, they have very high estimates on Target, and Target, again, $4 or $5. And this chart is technically so good, it's scary. unless that's the problem. If they miss by a cent, they say something like, oh, well, we don't think we could achieve these numbers, that much, but the growth rate is going to slow by 0.2%. Next thing you know, bang, they drop the stock. Because why did you disappoint? It's all a game of expectations. Their numbers could be fantastic. They could beat by miles on the earnings per share, on the bottom line numbers, on their free cash flow, all kinds of stuff. But if they say like something which doesn't satisfy the bullish analysts and so-called big money, then they'll drop the stock, at least short term, for and it's happened. But technically it's beautiful. Like there's like nothing wrong with it. MACD, look at that. Stochastics, this beautiful inverse, this Texas bullhorn pattern, the inverse head and shoulder over multi-months. The breakout at 130 right there, that was the breakout at 130. So let's see, worth playing. So I'm not going to look at every single chart because that's going to take all night. Let's move on to children's plays and stuff. Definitely look it up. This is definitely a play, a good earnings play. I don't know what this is. L brands, forget it. Nvidia, there you go. Everybody's hot on Nvidia. We've made money on Nvidia. So what's the story? The story is that just like any other really hot stock, if you don't deliver the highest expectations, they will take the stock down. That's the story. Otherwise, there's absolutely nothing wrong. But the chip sector has been terrific. Nvidia has been flawless in its execution in the automotive market, in artificial intelligence, in graphics cards, all kinds of stuff. They really have done nothing wrong. So Nvidia could pop anywhere from, generally can pop anywhere from 8 to 12 points. Make some real decent money. Now, one of the things that happens, just so you know, is the stock under normal market circumstances, all these stocks before earnings, they tend to run up into the earnings. So if Nvidia jumps $20 before earnings, I'm going to be a little hesitant to put in too much money in the earnings trade because it's already popped up quite a bit. So that's kind of a rule of thumb that you guys need to follow. You know what I'm saying? You'd like the stock to go up, but not crazy up before earnings, because then most of the move has already been discounted. Do you understand what I just said?
Question, Frank.
Go ahead.
In such a scenario, would it not be easier to just buy puts?
Yeah, so you can do a straddle. Okay,
Okay,
such
straddle.
a scenario, you buy puts, but powerful companies like this, you want to buy puts against Nvidia, they'll demolish you.
Okay.
Your puts will literally go to zero. So what you can do is you can buy a straddle. You can buy a put and a call at the same time. Maybe a little bit out of the money. So if Nvidia does shoot up big, your puts will lose 80% of the value. And we've done this before. It's a spread. And then your calls will go up 200%. So net, you'll make net, you'll probably double your money. Do you understand what I'm saying? So in a world where if 1 + 1 = 2, which in trading and in options trading, it's certainly not. I just want you guys to understand that. Okay, this is not kindergarten. 1 + 1 doesn't equal 2. It's some sort of derivative of 2. Those calculus heads, you guys will understand all that stuff. Bottom line is, stocks like Nvidia and stuff, be very wary of shorting these monsters. Just the way, be very wary of shorting the Apples, the Nvidias, the AMDs, the Teslas. Almost 23 billion, if I'm right, and I think the number is more, has been lost trying to short Tesla by minds which are bigger than yours and mine. The guys coming out from Stanford, physicists, these guys running these ultra modern hedge trading models. How come they're losing so much money? That's because they're behaviorally idiots. They don't understand the power of momentum. They don't understand the power of these great companies to keep on moving forward regardless of valuation. It's called them being dogmatically bearish. And a lot of you might be dogmatically bearish. Don't ever be dogmatically bearish or bullish. It'll kill you in this business. Or keep an open mind. So personally speaking, I wouldn't short these babies because they're just monsters. And Nvidia, highly doubtful that after the demise of Intel and their horrible quarter, and the fact that, as I talked about in the other webinar, that they can't even come into the next generation of chips. That's why AMD took off like a rocket, Applied Micro Device, Advanced Micro Devices. So Nvidia is also a beneficiary. So that's my opinion. So again, yeah, go ahead. There goes Paul. What were you hiding? I didn't see you,
Yeah,
Mr.
I got here a little
Nvidia
late, but
himself. Go ahead.
well, last earnings, of course, Nvidia is always expected to do a big move, but it was funny. Last earnings, it moved barely anything, like a few cents, and so it burned both the call and the put buyer. So I think because it did nothing last time, it's got a good probability to do something big this time. I think there's also a growing call from shareholders and growing expectation, like you mentioned. There's expectations built in
Yes,
for a
yes, to split.
share split.
Exactly. Now let me expand a little bit more on what Paul said. Okay, Paul is a terrific trader and specializes a lot in the big cap techs. So the reason why the market makers do that, where they don't move a stock, because everybody's expecting an outsized move, they kind of leave it flat and burn the premium on both sides, is if there is too much activity on that week's calls. So in other words, Nvidia is coming out on Tuesday, okay? Sorry, Wednesday? Yeah, Wednesday. So if somebody buys the Friday's one, they might be stuck, because if they don't move the stock that much, your calls and or whatever your puts are both going to lose premium like real fast, and you're going to be losing money. So what I would do is I would buy next week's, okay? And this way you have time to readjust, which means save time to cost average if the stock does pull back, because a lot of the times, and just to expand on what Paul said, they'll hold it down for 24 to 48 hours and then run it like a monster. Okay, so it's your call. But Nvidia has a lot of major catalysts on its way, including a clamor for a stock split, which most probably they'll do. And God help us if they do it on the day of earnings. It'll just burn the shorts like nobody's business. All right. So yeah, and overall price target on Paul was increased to 500 and what? Just last week, 525 or something.
Yeah, five and a quarter.
Yeah,
Yeah,
right.
and again, I don't really care about. I do care, but not give that much thing. But hey, big shot farms coming out with a $520 520 price target. Hey, better watch out. Okay, and honestly, let's look at the Fibonacci, the long term. This is long term. Nvidia is a $600 stock. Now, shorter term, let me just on the daily. A general implied volatility on Nvidia is what? Somewhere between $10 to $12 on a big move, something like that, right?
7.7%, I think it was.
7.7%. So let's call it 8%. So if we have 464 plus 8%, you're looking at, oh, my calculator, 464 plus 8%
The 34,
is $501.
500. Oh, to get to 501, yeah.
Yeah. So 8% is a lot. I mean, boom, $500. Can you see it as Nvidia at $500? I can. Sure.
Market likes round numbers.
They like round numbers, and they like this company because this company is not in the business of disappointing the street. That's one thing about Nvidia. So unless something is different, and plus they're looking to buy they should be getting regulatory approval to buy a company called ARM Holdings, which is one of the biggest chip makers in Europe. That's a big plus, baby. You know? So they get ARM Holdings under their belt. Nvidia's business just extended by another 20-25% across the sectors. So this is something quite serious. So anyways, you can tell we like Nvidia. All right. Synopsys is also a decent play. Alibaba Thursday. big one. And Alibaba's numbers are probably going to be blockbuster. So, and the stock can hit the highs, 268. As you can see, this is what Alibaba's chart looks like. This is actually a bull flag or a cup and handle right there. It's just moving sideways. Now, the only other problem is that we have the political tensions with, trying to delist Chinese companies and this and that. Alibaba conforms to US accounting rules, so that's fine. So the bottom line is that political risk is there. Aside from that, I believe the company will deliver very strong numbers. China's growth trajectory's picked up a lot over the past couple of months. And Alibaba and these companies are big beneficiaries of that. So I would say 268 on the top. It's a very defined trading range. Look what it's doing. And for traders, it's beautiful. You can buy the 240 when it's down towards 240, and you can sell when it's up towards 270. Let's keep it simple. All right. If it breaks out over that, then see you later. So this is good. All right. BJ's Wholesale, Estee Lauder. This is another big mover. We have played it during earnings, and Estee Lauder's chart is pretty damn good looking. Not just the makeup. Maybe some of you guys use it, and I'm just kidding. So, it's a great makeup company, and they sell big in China. So if Estee Lauder breaks out, you're going to see the stock well north of 220. It's a big mover. So we like these big mover type of high implied volatility kind of options on earnings because they tend to pay well. You have to pay a little bit more for the options. Instead of $2-3, you might have to pay $5 maybe. So I don't know, buy one. And that 5 can go up to 16, 17. It happens a lot, believe me. And then the other case scenario, that 5 goes down to 2. And then you look to see whether it's a reversal or not, whatever the case. Unless Estee Lauder comes up with something so terrible that the $5 option goes to 0. That's kind of a low probability move, but hey, it's options. So this is a good looking chart, Estee Lauder. Then well, we're talking a lot about earnings today. Another stock you should be you can look at Toro, the agricultural machinery, lawnmowers, all kinds of stuff, and agricultural stuff, right? Tractors, Toro. So this also could be in play. I really haven't played this stock much. Keysight is something that's always talked about by one of the guys on thing. It's a good looking chart. I haven't traded myself, but the stock can trade up towards 108 quite easily. Keysight. I think it's a software company. Then we come into Friday. We have another Chinese retailer, Bizan. I haven't seen that in a while. Seen the chart in a while. And let's clean this out. I can't really decipher this chart, but it doesn't look bad. Deere or Buckle. One second, guys. Can't figure this one out. Okay. John Deere. It's a very good looking chart. All right, without getting too analytical on this. It's a, one second, guys. Oh boy. Can't move the lines. All right, let me clean it out then. There we go. That's it. That, by the way, Jay, you're the one we talked about flags, right? You asked me about flags.
Yes.
Now that's
Yes.
a classic. That's a classic long-term bull flag, like a real technically classic. Look, let's do it from here.
Okay.
Was that you or your kid?
It was my kid. I just had a newborn.
Oh, who had a newborn? God bless you, man.
Jay, yeah, thanks, man. She's 5 months old.
Oh, God bless you, man. That's great.
She's
That's
she's learning stocks.
well, keep on showing her the charts. I'm telling you, kids know colors and patterns better than we do. Believe me. Trust me. I'm not kidding around when I say that. So it looks like talking about kids. It's like that little, it's that little rocking horse. You know what I'm saying? That's what it
There
looks
you
like.
go.
There you go. So this is a very classic bull flag on a major company, John Deere, and all green candles. That means the money flow and the overall price action bullish. Even on
Oh
this,
wow,
look at this, all volume, all green. Wow.
that's
So
amazing.
that's why I like Caterpillar. I told people to buy the 144 calls. High probability you guys are going to make some real decent money on it. You know, I told to buy the August 21st 144 call. So Caterpillar is not coming out this week, but Deere will push Caterpillar higher. They're in the same field. Okay, so John Deere is really classically a very good looking chart. It can easily pop 5 to 6 points, and this is something. And these are not the kind of stock that normally crash. You can see it goes up, then it pulls back a little bit, but it doesn't have those wild swings like a lot of tech stocks. So I like John
Hmm.
Deere a lot. I like John Deere a lot. On
So
that note, let's take, yeah, go ahead with your question. While I look at the
I was
last.
gonna say that's a much more stable stock because of all the green candles there.
It's just a
That's
stable
interesting.
stock because of the company. You know, I
Company.
mean, it does.
Okay.
Yeah, it's not the most unstable stocks where you can make the most amount of money are biotechs because you could
Biotech.
just go up like 500%, 700% on a stock. Forget about on an option, because you can get an FDA approval. They might get a big injection of money from one of the big pharma players. Pfizer, putting in 15, 30 million into a small biotech company. Boom, the stock goes up 40%. Your options go up 300%. So those are the most unstable tradable stocks because there is a lot of unquantifiable events that can happen. You might get an FDA non-approval. Boom, the stock drops. So with Deere and stuff, these are stable companies which have to do with global cyclical conditions, economic conditions, and such. So, and they're New York Stock Exchange stocks, so they have more institutional sponsorship. In other words, they're more stable. Yes. So
Makes
that's the answer
sense.
to your
Thank you.
question. That's it. Yeah. All right. So now we're out of the thing. This PDD is also another monster. I have traded it a little bit. Pinduo, PDD, and this one also is quite a mover. So keep an eye on this. Short-term basis, you're looking at 91 on the upside, up to 98. I don't think 98, but I'll take 91 any day. I'll take $6 on $85 stock any day. So this is one to look at. It seems like it's following the uptrend channel. You can see the pattern here. So yeah, I would say we could possibly get 92 on this one. Everything else looks good. All right, so now we're out of the way with this stuff. Let's take a quick look, and then I'll take some questions. Just a broad look at the markets. Futures are up 12 right now. This is the broad look of the market. Okay, technically, nothing's wrong. Like absolutely nothing is wrong. We came back, we retested. It's a bull flag. It's a rising wedge, which means we retested the bottom of the wedge, the up. This is the highs on the market, 33.97.5 on the E-minis, all-time highs. We're almost there by 25 points. So 25 times 8 is 200 points. So another 200 Dow points, we are kissing this green line. Classic textbook says, hey, when you hit a major resistance, you get selling. Yes, you do. We got selling as we almost came close to the all-time highs this week alone. This is a weekly chart. This is your daily. We got close and we pulled back. We got close and we pulled back. We got close and we pulled back. And now we're going for it again. I have a simple theory. The more you knock heads, you hammer the upper end or the roof or something, eventually you're going to break out. Okay? The more you hammer something, it gets weaker. So on the upper end, if you keep on punching the upper end, you're going to punch through it. The more you hammer the bottom, and the bottom gets weaker. I mean, the support gets weaker and weaker. But if it doesn't break, then the markets take off. Did you guys understand? It's a very simple Very simple theory, okay? So my feeling is after these, that's why a bull flag is born. Higher lows, it's actually an ascending triangle. I've already shown that on my chart. No higher highs, same highs. We went to 33.83, let's say, but higher lows every single day. Do you guys see what I'm talking about? Higher lows. Remember one thing, especially for newer members, please. You guys have your own computers. You guys have your own screens. You guys have platforms that have charts. Hopefully you have some that have the same charts as I do, like TD Ameritrade or investing.com. Okay? Primarily two that I use, quite a bit. Of course, I use Quad, my other specialized version of charting, but that's different. The thing is, if you have that, once in a while, just sit there and just look at the charts instead of waiting for these webinars. The more you look at them, more these things are going to talk to you. It's like art appreciation, okay? More you look at it, you're going to feel what the painter was feeling as he was painting it. It's the same thing with charts, all right? Futures are up 13 right now, 12 and a half almost. So the more it's punching, it's going to break out. Over 3,400, max move. Wow, 3,500. Can it happen on the futures? Sure, why not? Just those earnings themselves can do it. But these algos will do their hardest, like they did last week too, to take you out of your positions. If you don't believe that, just you heard it here first. You're gonna feel the pressure those black box machines will give you to take you out of your positions intraday by swinging the market around like a wild monkey. Okay, I'm telling you right now. And then they're going to run the same thing that you just sold because you couldn't bear to look at your P&L because you were down that particular day. Mark my words. Am I right or wrong for people who have been with me for a while?
You're right.
I'm dead right. And the hardest thing to do, people ask me, how do I do position management? You know what you do? Stop getting frigging emotional. When it looks really bad, you don't necessarily need to buy. Just sit back. Look at the charts of this of the thing that it's down, your options are down. Look at the overall charts of the market that I keep on showing you. Look at charts like this intraday, which are very accurate. But these pullbacks, when they do it, boy, it doesn't feel good. Your options, all of a sudden you bought something, you're down 60%. Like I said, if you can't handle 50, 60% drawdowns, you will never make the 50, 60, 100, 200, 250, 300% upsides. And that's the God honest truth. That's called mental calibration. It's not easy, I will tell you. If you have a lot of money in a particular position or one or two positions and you're down thousands of dollars on that, oh boy, it doesn't feel good. But this is not a business of feeling good, ladies and gentlemen. This is a business of pure discipline. Now, you can cut your losses a little bit. You can cut your losses a little bit. Sure, you can. But remember, you need to get back in again. You can reduce your position if you get a big drawdown on the market. This was a big drawdown on the market on the 14th. Boom, 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 boom. Right? These are hundreds of points. Not hundreds of points, but like 150 points or whatever. But what I talked about, and this is where your faith and your discipline and how regimented you are emotionally. Look, human beings are not genetically wired to be disciplined. You know that. Human beings are genetically wired to run when they see danger. Traders are inclined to just change diapers, every time. I mean, their own diapers. I'm just kidding. So that's how they are. So you gotta fight it. I don't have anything to say. I mean, I don't like it. A couple of days, like, oh my God, but then I'll selectively go in it. The buy here, buy here, buy here, buy here. Am I right every single time? No. Am I right most of the times? Yes. That itself is a testimony to my success. And I'm not patting myself in the back. I'm just giving you the actual facts on the ground. I don't know what other services tell you. You know, this, oh, never cost average, never buy lower. Yeah, bullshit. What world do they live in? Do they live in a world where the markets just go up in a straight line? They come down in a straight line. It's all so easy. Of course, you have to dollar cost average on option prices, on stock prices, because the market is volatile. But the pattern never changed. This cup, this handle, guess what? Still intact, despite slipping and sliding, slipping and sliding. Did you guys understand this part? Because it's a very, very critical component of your success in this business. So you have to either accept it and keep on practicing that mental and technical discipline, or I would say, please don't be a trader, and please, because you'll be losing a lot of money. So listen carefully what I'm saying, you know, the words of wisdom learned over years and years. Except I'm sharing everything that I've learned with you fine ladies and gentlemen. So consider that to be a huge resource. You don't have to make the mistakes that I did years and years ago. I'm telling you of the mistakes that I did. And I was actually far less emotional, and the market was far less volatile. But I was a little too aggressive at times. So that's it. So this chart is your ultimate short-term roadmap to follow. Any questions on this particular chart? Supports, red lines, red lines. This is the handle. I'm sorry, go ahead. Too much feedback. It's like a den of bats, man, please.
I got a question. When you look at charts, right, how far back do you go to determine the chart? Like what type of chart it is?
When it comes to short-term trading, if I'm going to trade over a couple of days, I'm going to trade intraday, I'm looking at the 5-minute, the 15-minute, and the 1 hour. When I'm looking at the longer term picture, I show you those charts on the daily and the weekly. The 4 hour, the daily, the weekly are slightly longer term, especially the daily and weekly. It all depends on what kind of stocks am I looking at. If I'm looking at fast moving monsters like Facebook, Netflix, Apple, Tesla, all these type of companies, then I am looking at the shorter term charts because they are highly volatile. They go up 15 bucks, they pull back 3. The general trend is higher. I keep an eye on the bigger picture while I trade the shorter term picture, because that's how you make the real money. Keep an eye on the bigger picture, because we don't know what's going to happen a month from now. We don't know what's going to happen 2 months from now. We don't. Even though the charts might be pointing higher, there are way too many risks along the way. This candle on this will answer your question just directly. This is a weekly chart of the overall U.S. markets. This is the E-minis weekly. Who asked that question, by the way?
Rick.
Okay, so see this candle? This is a weekly candle, correct, Rick?
Okay.
Yeah, this is a weekly candle. Each of this candles, the price movement from 32.69, the low is 3,200, and the high is 32.77. Do you know what kind of fluctuation that is? What I'm trying to get at is this looks like a beautiful green candle, but in that 1 week there were massive gyrations in the market, and that gyration came from 3,200. Let me just explain something to you and write it down somewhere, Rick, if you want to learn this stuff, because you can't keep everything in your brain. All right, 3,200 and 3,275. That's the width of this candle, which is a beautiful red candle. That's 74 points. Are you with me, Rick?
Yes, I am.
Do you know what 74 points? Please write this down, because I've mentioned this so many times and I still ask that and people are like, what? So I don't need like what's in my thing. Can you write this down, please? You have a pen there, Rick?
I'm writing. I got a pen and paper.
Okay, write it down. 1 S&P point is roughly how many Dow points? You were in the webinar. I said that quite a few times. So let's do me a favor. You don't remember. Write it down this time, please.
I did have it written down.
and it's not rocket science, all right? So please write it down. Everyone else do
Right.
the same thing, because these are the simplest, most basic things you have to know. So that's 74 points. The width, the bar length of this candle, right there, 74 points times roughly, let's call it 7. One S&P point is roughly 7 to 8 Dow points. So let's call it 8. Why not? It's easy to remember. That's 592 points on the Dow Jones Industrial Average. That's 600 points. So when you're looking at a long-term chart, you think you can be a trader by looking at a weekly chart? Sure you can, if you don't care what happens every day. Did you guys understand what I said? This body of this candle was 600 points. That means during the week, the market fluctuated 600 points. That means your options just went through like, came up for water, and like it's like wild. That means a stock like Boeing, for example, went up and down maybe $7, $8 twice during that week or more. So what I'm getting at, the long-term charts are all fine and good to keep a general mental directive of the market. Hi, am I bullish on the market? Are you bearish on the market? This chart tells you stay bullish on the market. So that keeps your cognitive bias, i.e. your mental state of mind, on the long side. Now you do what you want. I don't know. Maybe you just hate the U.S. economy. Maybe you think the market's, all whatever, mirrors and whatever they call it. So bottom line is, this won't make you money on a short-term basis. Did you guys understand what I said? A weekly chart cannot make you money on a short-term basis. It keeps you just grounded mentally so you can trade off these charts and make a crap load of money. So if you want to be a trader, you got to look at the short-term charts and then keep yourself mentally balanced by keeping an eye on the longer-term charts. Did I answer the question? Or if somebody didn't understand what I said,
I got it.
then this thing will come to you fast. If Apple is moving, Apple's chart is on a beautiful trajectory higher, but does not Apple like swing around like crazy on certain days? Guys?
Yeah, $10 moves.
Yes.
Big time. Your options can go down 70%. But does that change the longer term trajectory of Apple? Nope. So as a trader, you can manage your profits by trading Apple short term, at the same time staying bullish on it going forward. So that's the answer to the question. So these are the charts, the 1 hour charts, the 15, this is the 1 hour, for example. These are the charts that I track and I trade for maximum profits. This pattern here is known as the ascending triangle. Ascending triangle. Okay, and it looks like it wants to bust a move above the all-time highs. So these are the ones which give you immediate gratification for your money, whether it's a day trade or a multi-day trade. And the weekly charts and stuff keep you grounded on your long-term positions, or just keeps you grounded overall so you don't freak out just because the market is down 400 points. Because I just showed you, using just one candle on the weekly, that week alone, the market had a 600-point swing. 600 points, just one candle. So lots of volatility within this box, yet the uptrend is the uptrend. All right, I'm going to wrap up by 10:30. So, wow, it's already 10:30. So, quick questions, anyone, please. I mean, there's a lot of stuff I want to show, but we don't have time all night. So go ahead, questions, please. Anybody? No one? Okay. No questions, guys?
Hey, Frank.
Yeah, go ahead, make it quick,
Just
please. Yeah,
all right.
go ahead.
Sonos is one of the tickers you called for kind of buying options on it. I was trying to see what the long term or the short term direction is for Sono.
Sono is a long-term play for me.
Okay.
Sono is a long-term play for me. Sono, Blink, these are all long-term plays. This is Sono's chart. The stock is quite oversold. Um, Sonos is basically the stock, unless it totally breaks this downtrend line, which is 1273. I'm good to go. Meaning that
Okay.
I'll keep on buying. This is a long-term trade for me. I have September calls. I'm going to push them out to November. This is a major buyout play too. Okay, Citron Research, which is probably one of the hardest short sellers in the world. There are very few times do they go long stocks, and those guys are pretty smart. I'll tell you that. Andrew left, Canadian. So Citron thinks that Sono, and this is after we bought it. Then I saw it. I'm like, wow, and the stock started running. Apple or Amazon might buy these babies for $30 a share. Is it possible? Absolutely. So Sonos is the type of company, it is not a day trade. If you're looking to make, but any day you could wake up, and it's happened quite a bit. It's happened quite a bit. Look at the thing, boom. And this earnings, they pushed it down. So now it's trading on the lower end of the band. It breaks over 1450, it's going to go to 1550, just where the lines are, 1550. So percentage-wise, these small stocks tend to move quite a bit. They move quite a bit. Can it shoot up to 17 on any type of positive news announcements? Anything? Absolutely. So these are small cap stocks that are played by institutions, but also by retail traders. I bet you Robinhood traders are trading Sonos, but it's not a name that you hear too often. So that's the answer to your question. But I'm very bullish on it. And I've made some very decent money on it, and I'm net down on it right now slightly. Fine with me, it's good. Any other questions, please?
Jair, would you recommend making long-term calls on any of the cruise lines, Carnival or Royal Caribbean?
I actually don't know, to be honest with you. We played it once, we did well. I would personally, yes, because these stocks are so beaten down. And if you're looking in the long term, look how the stocks went. From the bottom, they went nuts, right? I made money on these babies maybe once or twice. Looking at the chart, do I think that they're on to one of those huge like 30% type of moves? It can. It can. I mean, who was that, Carnival or Royal Caribbean? The CEO came out and said demand is going through the roof because people are dying to get on the ships and go, which is natural. So with the right precautions and stuff, yeah, I would. The airlines, we have consistently made money on things like American Airlines. Look at that. If there is a COVID cure, oh my God, these things are going to go like, not cure, but like a vaccine, somewhat of an effective vaccine, which are being worked on, as you know. These stocks will just go nuts. Yeah, absolutely. They're very
Nice.
tradable stocks. They're Robinhood favorites, so huge retail involvement. But also beware that these big Wall Street guys play this cat and mouse game with the small fries. They play a cat and mouse game with the Robinhood traders like no one's business. All of a sudden, they'll just drop these stocks. And they did it just a few weeks ago, like 15, 20% within a day, and smashed them out. The Wall Street traders love playing games with Robinhood traders. Just remember that. It's just, it's just like a Wild West, you know. But overall, do I think the stocks can go higher? Absolutely, absolutely. That's my opinion.
Hey, Fred.
Excellent. Thank you.
Yeah, go ahead.
Just two quick questions. There's a lot of money in options expiry coming up, monthly expiry. Any general comments there? And also, what do you think the impact of a vaccine announcement would have on the market?
Actually, in my opinion, the market's going to shoot up, and the only things that are going to get hit are the vaccine plays. I mean, the not the vaccine plays, but the ones like the Zooms and things. There'll be automatic sell program which are built in there, because
Stay at home.
they just thought, the Teladoc and the Zoom, the Docu, all these companies which have gone through the roof, Livongo, all these companies which overall have gone up, I believe that they're the ones which are going to get hit, because it'll be like, whoa, vaccines out, let's go party now, you know? So yeah, I think the overall market reaction, the industrials, the travel companies, like that was just asked, the CCL, the RCLs, the UAL, AAL, Boeing. Like, my God, you want to play big cap on a vaccine announcement? I mean, real announcement. Like, it really, like, you know, not just, oh, we're in stage 3 clinical trial kind of stuff. Like Boeing.
Yeah.
Boeing's gonna go 200, like immediately. Like, it'll be like, see you later. Let's fill those gaps. 215, 240. I'm not kidding you. This is pretty much what's going to happen. I think the first level of massive engagement will be on any type of major successful vaccine introduction, mass introduction, will be travel companies. Absolutely. Because that's the first way. Booking.com, you know, Expedia. Yeah. So that's my answer. Now, regarding options expiration, you're a master of that. You get all this great info from different sources. I don't know what Max Payne is on this thing. What the you know, put call ratio, or even the call put ratio is. But given what I feel, again, on positioning by hedge funds and stuff, they have started to position more in the market, but still heavily under position. The fear is still in the market. I can feel that. Anytime that the market comes down, I can feel the fear. You know, and so all that is very good for the market to look. Let's keep this simple. The markets are kissing all-time highs. An overshoot over that is almost imminent. That's it. Does that create a sustained bull market for the next couple of years? Maybe, but I'm talking short term as a trader. Any type of big pop-up, you want to take profits down. Re-enter again. So that's why I said right at the beginning of this call, you gotta this week, if you have positions, whether you're an active trader or not, you gotta get an eye on the market, on my real-time Twitter feed, on the technical charts. Keep an eye on your money. You gotta do it, because that's just the way it is. So we're almost there. So why can't we go a little bit? You know, why can't we bust a move? I mean, it's just so obvious that. Let me just show you this one. Yes, daily new. No. Let's look at the weekly. This is a terrific, easy to look at chart. Okay. Forget the internals. Internals are just like, they're just like, buy me now or die. That's the kind of screaming buy signals they're giving you. Overbought, but so what? You can stay overbought for weeks. Look at that. Now, look at this. I mean, this is telling you that this upper Bollinger, this dotted line, is 3450. So I'm still looking at S&P 3450 to 3460 on a blast up. I'm not saying that's the end of the world, but just you know, things get overbought short term, they'll pull the market back. But when you look at these weekly charts, how can you be negative on the market? Yeah, somebody will say, well, it's a rising wedge, they generally tend to fall. I agree. So, but at the same time, I think first bust up move, then a pullback. So I say a bust up move. We already got our pullbacks and stuff. Middle of the month. I said that weeks ago. I'm saying it again. Middle of the month, you get that options adjustments, all kinds of derivatives adjustments. They'll never talk about it, but it always happens. Middle of the month. Give it a couple of days. Now that's out of the way. Now we're heading towards the end of the month. So barring any really unfortunate event, I think we get up to 3450, 3460 on the S&P 500. That is another, like I said, another 400 to 600 points. And these earnings alone can drive us higher, as if you tie in together with everything I talked about. All right, on that note, it was a pleasure having this fireside chat with you. What fireside? It's summertime. But God bless you all. Bring in those referrals, bring in great people. Let's be vigilant. Let's try to control our emotions. That's what I keep on telling myself. Let's stay focused. Let's not go nuts on anything, but let's try to make money on the stocks that go nuts. So hopefully we'll select the right ones. If anyone has any ideas for me to look at stocks, DM me directly on the Twitter feed. God bless you all. Have a great evening. Thank you again.
Thank you.
Good night.
Good night.